Welcome to the Intelligent Investing Podcast, where modern portfolio theory can suck it. A student of the School of Graham and Doddsville and a clergy member of the Church of Warren Buffett. Here's your host, Eric Schleien.
Hi, this is Eric Schleien. You're listening to the Intelligent Investing Podcast, and today we have Jack Bosch on the show. Jack, welcome to the show.
Thank you very much for having me.
Yeah, and we're doing this as part of this coronavirus investment series. And, I thought it would be interesting to bring you on the show. You do a lot of stuff with real estate and land, and, perhaps there might be some opportunity, in some of these distressed markets. And, before we get into that, just for the listeners, would love to, have you share a little bit about who you are, your background, and what you do.
Okay, wonderful. Well, thank you very much, first of all, for having me here. It's crazy times we live in right now, to say the least here. But it's also times of great opportunity. I'm a big believer that in times of crisis, there's a lot of shift in wealth that's happening, and you can either be on the sidelines and watch it, or you can be actually one of the participants and position yourself such that you're actually on the winning side of things. So my background is that I'm originally from Germany, as you can probably tell from my accent. Doesn't sound like any kind of U.S. state. That sounds like me.
You're not from Kentucky? No
not
way.
Kentucky, no. Although I like Kentucky Fried Chicken, but that's about it. So actually, I've only been in Kentucky, I think, once. One of the few states that I have not been much. Anyway, so I came from Germany back about 23 years ago to the U.S., finished my college degree, got a job, met my wife, who is an immigrant from Honduras herself, from Central America, Honduras. Got through the entire job thing, got a green card finally. But in the process, we were so unhappy about our jobs, kind of like a similar situation. Only then 20 years ago, there was the dot-com bubble burst, and I was working for a technology company back then. There was a not so big recession, mainly in the technology world. But the company I worked for had let go of a lot of people. And in that time, I didn't lose my job, but a lot of people around me did. And I used that instead of as something to be scared, and I was scared for sure, I used that as a method or as a reason to find something else to do in life that would not put me at the mercy of an employer. So we dabbled around, tried to find a bunch of stuff, and finally found real estate. And the niche that we focus on became land flipping, because you can actually, in land flipping, contrary to house flipping, you can start without, not contrary to house flipping, but for contrary to house flipping, there's almost no competition. And by focusing on the land that's like, let's say, below $100,000, most of them are free and clear, and the owners in many cases don't want them anymore. So we pick up land we basically developed a method to pick up land for 5 to 25 cents on the dollar from people who have owned it for many years and just don't want to have to do it with it anymore. And in this environment, there's a lot of them that want to sell their property because they want cash. And then we sell them online to platforms like Zillow and Craigslist and Facebook Marketplace and Land.com and so on. And we sell them in two ways, either as a wholesale deal or we sell them with seller financing. Now, this we have done for over 4,000 deals with that. We now teach it too for the last 11 years. We teach it to students who are doing deals all over the country. But then also the money that we made in that, we have moved over into other asset classes. So we're using our land flipping as a cash machine and cash flow machine, because the second way we sell these properties is with seller financing. So we take a down payment and then make monthly payments. And I can probably go into that in more detail in a moment. But just to summarize it, the profits and the cash flow we made back then got us through the 2008-9 recession without any problems whatsoever. As a matter of fact, we were extremely cash flow liquid and was enabled us to invest a lot of money into the deals that opened up during those crises. And those deals now have all quadrupled: houses, apartment complexes, commercial properties. And they all have multiplied in value since then. And so you can basically almost make it like a rolling kind of thing. So we now invested in houses, apartment complexes, commercial properties, land flipping, and have built a very nice portfolio out of that.
And interesting. And how did you discover that there might be opportunity in land flipping? Like, what was the insight for you around that?
It was a coincidence more than anything, because we read all the books and things about real estate investing, and we came across the concept of wholesaling, and we did the driving for dollars, meaning we drove around neighborhoods with a bunch of where we found a bunch of boarded up houses, and we put one under contract. We wanted to flip it, wholesale it, just by marking it up $5,000, but because we didn't really know anything about real estate, particularly about American real estate. Like in my home country in Germany, I grew up without any relation to real estate. My parents bought their house when I was 8 years old, and they sold it like 5 years ago and moved into a condo. They lived in that same house for like 35 years or so. There was no investor mentality anywhere close to where I lived. None of my friends, parents, relatives or so. So I didn't know anything about German real estate, and I knew even less about American real estate. Even the language I didn't know. So I didn't know how much it costs to estimate repair, how much repairs are for a kitchen, a bathroom, a roof, a ceiling, a mold, electric, foundation. And so as a result, we did everything wrong in that first deal, and nobody wanted to buy the deal. And then we were tempted to buy it ourselves, but luckily we didn't, because we would have lost our shirt. So we just kept looking. So we found tax delinquent, we found tax deeds and tax liens. And then we had a thought, and even that didn't really work for us, because at the tax deed auction, we were outbid when we attended. Went to California, attended the tax deed auction. I live in Arizona. We went to California, attended the tax deed auction, and we were outbid by thousands of dollars beyond what we even had in our pocket, we had available to us. Then we bought some liens, and they were redeemed 3 weeks later, and we made like $3.72 in interest. So we were struggling. We were failing. But then one day we had a thought that says like, well, what if somebody truly doesn't like their property anymore, like it had happened like we had seen in the tax delinquent world, in the property tax delinquent world? Somebody doesn't want to pay their property taxes because they just don't want that property anymore. What if we circumvent this entire high competition system and send them a letter? And that's what we tried. And we gotten responses, and all the responses, every single one of them that we gotten, was only from land people. So people that had land. It was like, what do we do now? Right? We didn't have to do it. So we wanted to be overly cautious. When on the first deal, the property was worth $8,000, owed like $300 in back taxes. So we offered $400 for the property, including the back taxes. And the guy accepted it, and we sold it to the neighbor literally the same day. Well, the day that we bought it, we went up to the property, put a sign on it, and sold it to the neighbor for $4,000, so 10 times our money. And we were like, okay, that is really cool. Let's do that again. And we did it again, bought the property for $500 and sold it for $10,000 just 3 weeks later. Again, a piece of land. And after like the first 5-6 pieces of land, we're like, you know what? Forget about houses. They're cool and they're fun and they're sexy and they're everything, but we don't actually have to know anything about repairs, and we can build our financial independence here with just land flips. Then we buy it 5 to 25 cents on the dollar without having to know anything about houses. So we literally shut out all the houses, and for the next 6 years, all we focused was land, and built that up to a very nice monthly cash flow from seller financing, and paid off our debts, built up a really nice stash of cash, and then when this crash came, we were able to continue doing deals. This worked all the way through the crash, but we were able to actually buy stuff at bargain prices then.
And are you focusing on land where there's unpaid property tax? Is that the niche, or?
Not anymore.
Okay.
Not anymore. Great question. At the beginning we did, but then about, let's say, a year into it, we realized that actually, even though we went initially only after tax delinquent people, by the time that we actually sent them their letter, because we do a direct mail process where we get like a 4 to 15% response rate, so a really high response rate.
Yeah, that's really high.
Yeah, it is incredibly high, but it's because there's almost no competition, and because there's a lot of people who don't want their properties anymore. And because we have really fine-tuned the letter. We spent a lot of time and a lot of tests on that letter. But we figured out that like, let's say you go to a county and you get a list from the county with 10,000 property owners. We didn't send out 10,000 letters because that would have gotten us like 1,000 phone calls, which is way more than we could handle. So we sent them in little chunks. And by the time we got like to the 4th or 5th chunks, a lot of people had actually already paid off their back taxes. They kind of like grumbly and grudgingly paid their back taxes one more year. But they really didn't want the property anymore. So we realized that after doing a little analysis of our deals, that 81% of all our deals had actually paid their property taxes by the time we got to them. So we're like, well, if we're picking up 4 out of 5 properties without back taxes, why do we focus on back tax properties? Let's focus on, and since then we have no longer focused on back tax properties with back taxes. We're focusing on all properties between $5,000 and $100,000. That's our sweet spot in market value. And we're picking up properties left and right, and now our students do the same.
So entertain me for a sec. So let's say you're buying some property for $1,000 or something like that. What kind of analysis are you doing where, maybe when you try to sell it, someone's only want to give you $500 for it? Like, what if it goes the other way? So what's sort of your preliminary analysis that you are confident you can sell it for a lot more? Well,
and I love that you use the word preliminary, because that's exactly what we call it. We call it the preliminary value analysis.
Okay.
So when you buy a property, actually, first of all, we don't even buy the properties. Most of our students now do double closings or assignments. Right, so they don't buy the properties with their own money. They use the buyer's money in a double closing where they buy and sell in the same day using the buyer's money, or they use assignments. So their money is not even at risk. But either way, even if you put your own money down, what you do is the first thing you do once you send people a letter and they call you back, and you can outsource that to a call center. We have a relationship with a great call center that does that for many of our students. But then once they call you back, you need to do that preliminary value analysis. And that what you're effectively doing is you're looking for comparables. You're looking for comparables in the area. You're looking for sold comparables. And if there's 5 other properties, let's say the property is worth $10,000. And we find out in the area that this quarter acre in this kind of neighborhood is worth that other 5 lots in the area sold in the last, let's say, half a year for $10,000. Mm-hmm. Then we have our value. Then we know that the property is truly worth $10,000 because other people have paid $10,000 for similar properties in a similar area in a very recent time frame. Just like with houses, you do comps. Right. Now, there's several other ways that you do comps. If there's non-available, then you can work with listed comps. You can also work through the assessed value to back into the value. You can work by property size, and there's like 5-6 different ways that we get to the value of the property. And usually we apply at least 2, if not 3 of them to make truly sure that we're correct in our valuation. Okay? So if 2 or 3 different methods show us, like if there's properties listed for $13,000 and there's properties sold for $10,000, and let's say this is in Florida and the assessed value is $9,000. In Florida, the assessed value is about 90% of market value. So if it's assessed at $9,000, then we know the value should be around to $10,000. If we see sold properties, similar properties have sold for $10,000, and we see some listed properties for $12,000, because listed properties are usually, the sale price is usually a little bit lower than the asking price. So if they're listed for $12,000, we subtract like 20%, and we get to the $10,000. And at that point, we have 3 different methods, all point us to a value of $10,000. So if that property is worth, and that's like your example, usually we like to target a little bit higher value properties. But in that case, I would indeed offer about $900 or $1,000 on that property, about 10 cents on the dollar. And then chances are extremely, extremely, extremely low that somebody's only going to offer us $500, because we have established beyond any reasonable doubt that the property is worth $10,000. So if I have now 2 choices. I can put this property on the market for $5,000 or $6,000 and sell it very quickly because it's a bargain in the area. Let's say it's an area full of like a little bit more rural area, perhaps a half an hour or so outside of a bigger city, where lots sell for these $10,000, where you can put a mobile home on there. And this is attractive for a lot of retirees potentially that can't afford the high cost city living. They want to be not too far away from the city, but they want to have something. So they'll pick that up for $5,000, $6,000 like tomorrow. Mm-hmm. The second option would be to take that property and sell it for $10,000 with owner financing and offer it, give me $1,000 down payment and do monthly payments of $250 a month for the next 4 years, and the property's paid off. And that is the other way, and that actually provides you, if you do this the right way, you actually get the down payment pays for what you paid for the property. Basically, you paid the $1,000, you get $1,000 as a down payment. And sometimes even more, you can get $1,500, and if there's some closing costs, it covers that too. Like one of our students right now got a property under contract that's worth $50,000, and he has it on a contract for $1,980. So there's no doubt in my mind that he's going to sell that thing for probably about $40,000 with seller financing, get a $4,000 to $6,000 down payment and monthly payments of $500 for the next 10 years or 12 years. And that's a beautiful cash flow picture.
Right. So why? So let's say I'm the seller. Like I own this piece of property. Now, why would I sell? So, and you think it's worth about $10,000. Why would I sell it to you for $1,000?
Many, many reasons. One reason is, our number one reason is often that, the top three reasons. There's number one, a lot of buyers owned this property, a lot of sellers owned these properties for like 20, 30 years already. Okay. They were planning to retire in that area themselves, but for whatever reason, maybe the spouse has passed away, or just a happy reason that the grandchildren are born in the area and they don't want to leave anymore, and that they're not wanting to move anymore. Then the second reason might be that they've gotten inherited it. So the parents passed away, the children are now living in New York City or living in Atlanta, and the property is in Texas, and they're like, I don't want to deal with that, I don't want to be there, and they don't want to pay the property taxes anymore. Now, could they list their properties themselves?
That's what I was going to ask. Why don't they just list it? Yeah. They
could, but most people are not investors. Most people don't think like that. Or if they thought like that, I would invite everyone to go look at some listings on Zillow, go into the rural area or into just outside of a city. These listings, in other words, stink. They are absolutely ugly. There's nothing attractive about these listings. And one of the things that we teach our students and we do in our business is that we actually list these properties such that they actually tell a story, that they actually appeal to the people, that they actually show what's around it. And what most of these people do is they just show a picture of a piece of dirt and then say, this is available, build your house, call me. And then they don't offer any owner financing, they don't offer any discounts, they're asking for $10,000, and it's a butt ugly listing, and so nobody buys it. We actually have students that go into Zillow, buy properties, do rock bottom offers to people that sell their properties there, just take the property, relist it with our method, and sell it for more than it was listed before in a matter of 2 weeks.
No, Jack, I think it's funny that you're saying this because I've looked through Zillow before when, even just looking at like an apartment rental or something, like that. And I have many times come across just something that was like a chunk of land somewhere in some town I never heard of. And 9 out of 10 times, if not more, it was like the ugliest listing, very unprofessional. It was just this like blurry image of like some grass somewhere. And I get it.
Exactly right.
No. So I'm also curious about something. So let's say I'm the landowner. Is it that these are too small for, say, like a professional broker to take on? Will they just not waste their time with like a parcel of land that might be only worth $10,000? Like, can they get help?
Yeah, that's part of it. So also, by the way, the third reason is like people need money. Like people need money, especially during this coronavirus times right now. And that's why we want to talk about specifically about that.
Yeah.
Because we actually have seen a substantial uptick in sellers' responses. We usually get a good uptick, but right now, good response rate of 4 to 15%. But right now we get even more deals, more people calling us back, more deals are being accepted, and we can actually cherry pick our deals. And on the selling side, actually there's a lot of people looking for land because they're all sitting at home and they're bored. They can't watch sport. They can't watch, they can't stand the media anymore. They're basically spending time online and surfing around and they're having conversations and a piece of land of like a 10-acre, 20-acre piece of land out in an hour away from the town or even an acre outside of town where there's coronavirus, where they can, for the people that like the outdoors, sounds like a fantastic thing right now because even RV camps are closed, campgrounds are closed. So this is very, very attractive to a lot of people. The stock market is down. People are like moving money out of the stock market. It's like, where else do I put it? And then quite a few, and we have seen exactly the same thing in 2008, 9, 10, that money has actually moved, that money has moved into the land space, not the price, but But people just want a little bit more of the owner financing because they want to commit all their money in there. But the demand for land has actually not gone away in 2009, 10, 11. Just the way you sell them is a little bit different, a little bit more with seller financing.
Right.
So this is a big reason. But sorry, your question was again?
So now it opens up two things. So before I get to my question and then on the flip side of what you're saying is if I'm someone who needs some capital, maybe I just lost my job or maybe, my retirement's down a lot and I just need to raise some capital, getting rid of a piece of property that I'm not even using in the first place will also help guys like you.
Right. It removes your liability of having to pay property taxes as a seller, and it puts your cash in the pocket because not every deal obviously we buy for $400. We can pay people $20,000, or we can offer $20,000 on a $60,000, $70,000 property, no problem, and that's real money for people that gets them through this. And then for something exactly as you said that they don't even want anymore, and then you put them around. If it's worth 70, you buy it for 20. You put it on the market for 40. Somebody else is looking for exactly that, jumps on it, and has their place outside of the city. And you just made $20,000 in the process. Yeah.
So that clears it up. So my question before was, are these properties? If I'm selling the property and I don't want to list it, is it just that a broker's not going to want to work with me because it's not worth their time, or?
No, brokers do accept them, but the brokers who accept them are usually what usually happens is that somebody has a neighbor in the area, or somebody just picks up the call and calls a brokerage in the area where the property is, and just says, "Hey, I want to list my property."
Yeah, but why won't they do that? Yeah.
Yeah, and most of these brokers, though, are house brokers. And the way you list the property, sorry,
okay.
A quick sip of water.
All right, I'm drinking tea over here, so.
Yeah, the way you list these properties, as I mentioned earlier, is quite different. Right? We list these land properties by telling a story.
Yeah.
Right? We're telling a story of where it's located, what's close by, what you can do in the area, what you can do, where's the next grocery store, where's the next medical hospital, where's the next things, because the kinds of properties we focus on is, number one, in the outskirts of town, what we call the path of growth. Number two, it's a big, larger acreage in more rural areas, which is attractive for the recreational buyers. And number three, there's infill lots. So the infill lots are the easiest to sell because the builders are actually stocking up on land in environments like we have right now. Like the builders, particularly the bigger builders that have deeper pockets, they're buying, like in the 2008 and 9 downturn, the builders like Toll Brothers, D.R. Horton, they raised $1 billion each and went shopping for bigger pieces of land. The mid-sized buyers, they're the ones that buy more of the infill lots. But but anyway, back to the realtors. The realtors are typically, what happens is you call a realtor, and it's a house realtor. The house realtor knows that in order to sell a house, they get a photographer in, they stage the house, they take nice pictures, they put it on the MLS, and they do a broker open, and then do an open house, and then it sells itself. You can't do any of those things on a piece of land.
Right.
So therefore, they don't know what they do. So they actually treat it like Cinderella, like this the evil stepdaughter, like the evil stepmom treats Cinderella. They treat it just like, yeah, okay, I'll take your listing, whatever. Perhaps somebody buys it. They take one of these blurry shots from like Google Earth or Google Street or Google Maps. They don't even go out there themselves. And then they subsequently, and of course, we don't need to go out there ourselves. I haven't gone and looked at a property for 13 years anymore. We buy them sight unseen, and we even have students in Germany doing it right now. But again, the realtors just put a slap on an ugly picture, put a listing, put the things on, and then if it's a hot area, it'll eventually perhaps still sell, and then they get the little commission, but they just take it on for the relationship with a client, because down the road perhaps they get another deal from them. They don't take it on as with any kind of knowledge or intention to sell this, to go full out and market this property properly.
Right. And then as
a result, they sit there and they're ugly.
Yeah, and then does it typically take a much longer time to sell that piece of property as well if they want to get it off their hands?
It depends.
Okay.
We have seen properties sell in 2 days. We've seen properties sit for 3 months, right?
So I'm still unclear then. So, right, if I'm a property owner, I don't want to pay property taxes anymore. Whatever my reason is, I just don't want this property that I'm not using anymore. So Why would I go with you over just calling up a real estate agent or a broker and saying, hey, can you just list my property? Is it that I think it's going to take too long to sell, or what's?
Well, many owners have actually tried the realtor route, and it has not led anywhere.
Got it. Okay.
So they're already done. They've been there, done that. They don't want to deal with that anymore.
So a lot of these people have actually tried that route, you're saying?
Yes, they have tried that route.
Interesting.
So when we come into picture, we don't offer them a listing. It's the other thing. A listing is not a promise to purchase.
Right.
A listing is just a listing. When we come in, we offer them an actual purchase contract. And we offer them an actual dollar amount. And what we do, though, is because there's no competition, this is a completely different thinking than house flipping.
Yep.
House flippers are out there say, like, we buy your house in 7 days. Well, we do the exact opposite. We basically say, hey, we want to buy your lot. Here's the price. And they sign it because we are actually not looking for people that are in severe distress. We're looking for people that just don't want their properties anymore. They have owned these properties free and clear. They just don't want these properties anymore. And yes, if somebody says, I'll give it to you for 10 cents, but I need to close in 3 weeks, we'll come up with the money. We just buy it and we own it, right? Not a problem.
Yep.
But usually what we do is we actually have in our purchase contract a close of escrow of 6 months down the road, which gives us plenty of time to market the property. And then we go out there, and if we do our job right of marketing the property, it should sell anywhere between 2 days and let's say 3-4 weeks. Now, the properties that sit for longer either have done the following. They have not offered seller financing and the price is too high still, or they're just in areas where properties are slower, which is the first thing we teach our students to not do. So we go, but I look at our students, sometimes they have some that sit a little longer, but the average is like properties sell fairly quickly. And within, let's say, a couple, 3 weeks, 2 to 4 weeks, they should sell. And at that point, it's actually a great news for the seller, right? The seller gets the property off. He gets within 4 or 5 weeks, he gets his money. He's super excited. And that's 10 times better than going with a realtor that's just going to slap some ugly thing, particularly if he has done it already without any results.
It's fascinating, Jack. So if someone wants to get into this and learn more about how to do this, you offer some resources. How would people actually get into learning about this? Yeah,
so we have two places that you can go. Both are free. You can go to the website Land Profit Fun, F-U-N.
Okay.
So Land, L-A-N-D, profit, like the word profit, and then fun, F-U-N.com. And you can watch there. You can register to watch some videos and stuff like that. Or we also have a Facebook and also have a podcast called the Forever Cash Life Real Estate Podcast.
Oh, great.
So Forever Cash Life. We talk about that. But the third thing is then we have a Facebook group called Land Profit Generator Real Estate Group, which is completely free to join. You can't sell anything in there. You can't. It's purely just our students are hanging out there. And in that group, there's like literally hundreds, but there's a lot of our really, really successful students hanging out there and helping each other and helping newbies and helping everyone and posting their deals. And it's just a really giving environment where we help each other.
That's awesome. So I'm going to ask you after we're done if you just email me all that, and then I will put up those links on the show notes at ericschleien.com/podcast.
Absolutely.
Awesome. Well, is there anything else that while we have you on here, is there anything else you thought would be valuable to share or talk about?
Well, the most important thing I want to share is that in these times of the coronavirus and quarantine and stay at home and things like that, what really made our transition really completely painless right now is that we have a business and our students too, they have a business that works from home and is completely virtual. I don't know if I mentioned that. Like everything we do is virtual. We look at these properties through Google Earth, Google Street View, Google Maps, Google County websites. We contact the owners by letter. They call us back. You can outsource that. We send them offers by mailing. We close with title companies. We sell these properties online. Everything in this can be done from home. And it has proven that it works through recessions because we have carried this business all the way through the 2008 and 9 recession. So this is really, that's why it's important. The adjustments in the COVID environment you need to make is only that we actually get to buy more properties cheaper right now or put them on a contract cheaper than we ever have. And the sale prices have not given in yet. They might give in half a year from now if we're still not out of this, but even then you buy cheaper and you sell cheaper. So all I wanted to say is that when you are in an environment like that, you can, as I said at the beginning, you really want to look around and see, what can I do with my time that I have right now? What can I do if you don't like the situation that you're in right now? What can I do to position myself in a way that I gain complete independence from the outside world and complete independence of the economy, and you can really create your own economy where you're at home. And real estate can do that, but certain real estates can do that better than not. Like my apartment complexes right now are suffering a little bit because there's tenants and they might not pay rent and things like that. So far we haven't seen it yet. They're doing all very well, but we're expecting there's some sufferance going to happen in the next few months. Versus the land business is like there's no tenants, there's no toilets, there's no termites, there's no mold, there's no inspectors, there's no appraisers, there's none of these things. So look for businesses that are as little red tape, as little overhead as possible that you can do in any kind of financial environment, and you found something that you can carry, that you can do and provide financial independence for your family, no matter what the economy does.
Yeah, you're basically doing land arbitrage, is what I would say.
Basically, yes, absolutely, yes.
Very cool. All right, well, Jack, it's been such a pleasure, and really appreciate you sharing all this knowledge and being willing to be so generous to share this with people as well.
Well, thank you very much for having me. I really enjoyed this.
My pleasure. All right, take it easy, Jack.
Thank you.
Yeah, bye.
Thank you for listening to the Intelligent Investing Podcast with Eric Schleien. If you'd like to connect with Eric for questions, comments, feedback, ideas, or to inquire about being on the show, please contact Eric at intelligentinvesting@gmail.com. So, in the words of Charlie Munger, I have nothing to add.